Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Monday, February 8th, 2010. Well, the markets are trading down today, just slightly though, on the back of the massive reversal we had on Friday. Now, Friday was a unique day because it's one of those days where you have to say to yourself, the market may have put in a short-term bottom based off those lows on the SPY on Friday. Now, we're going to focus on the SPY because it basically relates to the S&P 500 very, very closely. And as you can see on Friday, we had that low hit at around 104.50, and then the reversal up, small in spirit of bull flag, and then a constant move up. Big buy programs hitting on heavy volume. Note the volume here, folks, on those buy programs on Friday, where we just had a massive amount of institutional buying. That's a bullish sign, folks. You have not seen institutions step up in a long time, and to see them stepping up in this manner probably, again, kind of solidifies the idea that this might have been a short-term bottom put in the market on Friday. Now, today what we saw was a little bit of a continuation of the move up from Friday's move up in the powerful way, and then as we got into this midday session, guys, volume has died off, and the markets have kind of faded. Now, what is this called? A fade on this market after such a strong move up from Friday's lows is what's called consolidation. Consolidation where the market kind of goes sideways to lower, and it actually is a bullish signal for the future move in this market. Now, again, you're looking for a possibility of a move maybe into tomorrow, Wednesday, Thursday, Friday. Overall, I would generally think that past the move from Friday, you look for this market to trend higher for the week. Now, it doesn't mean that any specific day will guaranteed be up, but over the course of the week, you should see a market that closes higher by Friday rather than lower. And again, the key is this reversal here. And I'm going to show you on the daily chart what I'm talking about. See this tail on this candle? This is a candlestick chart on the daily SPY, and you can see how it traded on Friday all the way down to this 104.50 level and then back up and closing near the highs of the day. That again creates what's called a bottoming tail in the market on a technical basis. That is an extremely bullish signal. Now, what you look for here again is sideways consolidation, which is exactly what we're getting today. The SPY right now is down 11 cents on the day, a minor move. The Dow is down about 50 points, the Nasdaq down 2.5 points, and the S&P down about 2.5 points as well. And again, what that's called is consolidation. Consolidation in a bullish manner so far, in spirit of bull flag, would be the term that will be utilized, although you generally need to see a little more bullish consolidation before the move can continue to the upside. So keep a watch into the end of today. We can see the 60-minute chart as well, and off of this big up move, look at this sideways, slightly lower move in the markets. That's perfect consolidation right now, really tracking the 20 moving average. Here's the yellow 20 moving average sloping down. You can see resistance. Look at this resistance point right here, 107 to 107.50, major resistance based off this pivot low right here. And sure enough, that's where we paused before we broke down into Thursday and then onto Friday's lows. And then sure enough, back today, what was the high today? This 107.40 level, this upper range, which coincides with the pivot on the 29th of January. So again, look at the technicals. The technicals will speak just so much in regards to where this market will head, and ultimately watch for this consolidation to continue. Now, we're going to touch on a few different charts. First of all, let's touch on the intraday, what to look for into the afternoon session. First of all, market's beginning to make a little bit of a move up after fading. Keep an eye that this market most likely will end flattish to the day. When I talk about a consolidation day, I usually look for an up or down 50-point day on the Dow, and that's precisely what we have on the downside right now on the Dow. But now the market is beginning to rotate back up. You have the 50-moving average right here, which will be major support on this. If we were to come into there, you'd look for another bounce as well. And if we got through that point of interest, you could then start to look for first the low of the day right here. All right, that would obviously be the first point of interest at 106.15, and then this green trend line at 105.75. If you took that out at some point today, then obviously you'd start to look for this bottom. But again, I do not think that is likely in the near term. In the opposite front, I actually expect this market to move up over to this 200, maybe by Wednesday. At least by Wednesday, I would think that you're at this 200, possibly even by tomorrow, believe it or not. Now, let's go over some key charts. What are we seeing today? Technology overall is acting very nicely. All right, we're going to take a look at some of the technology stocks. Google, for one, GOOG, symbol GOOG. Is moving up today. You can see it moved up very quickly early in the day, has faded. That's actually an in spirit of bull flag as well that almost looks like it wants to start to play out. Look at that. An up move, a strong up move, followed by sideways to slightly lower move in the markets on lighter volume. That's a direct in spirit of bull flag, and generally that will play out to the upside. So you can see Google beginning to trace up, confirming the possibility of a move up here in the stock market as well as in Google's stock price. In addition, folks, take a look at Goldman Sachs financials. today are slightly weaker. You can take a look. Financials now had a huge reversal on Friday. I mean, for instance, Goldman Sachs hit a low of 148 and change on Friday at the lows, and then reversed to close at this 200 moving average. All right, that's a $6 reversal on Goldman Sachs, basically. Today you had a pullback and then a retrace back up to that 200, and you still really couldn't get above that 200. You closed above here, but there was no in-the-money stocks confirmation signal, which is a direct indicator that, again, that you won't go higher. In fact, you're going to reverse, and you did do that. But Goldman Sachs, again, is starting to make a little bit of a move up here with the overall markets. Now, there's some other key stocks that I've alerted. I'm holding currently quite a few long positions, but not very many on the short side. I just have actually a half a position remaining of all my shorts that we held from January 11th top when I called the top in this market. And at that point, really over the last month now, I've unloaded a majority of my shorts, which were quite a bit. It was EDZ, FAZ, SRS, QID, and even more. I've unloaded everything but half a position in QID just as a security measure. And that's purely and simply a security measure. On the long side, I've accumulated stuff, but again, that's for our premium members to know to continue to profit off what I'm doing, what I'm educating on, and so forth. So keep an eye on that. Amazon, let's touch on Amazon. Amazon has faded quite a bit today, but is still up about 87 cents. The interesting thing about Amazon today, take a look at the chart signal here. Look at this. Here's gap fill right here, this blue line. What did price come to today? Gap fill. For those of you that are technical gurus like us that continue to look for these plays, that's a no-brainer scalp on your hands. Why? Because whenever you come into gap fill, especially when you're up this high early on the day, you can look for a bounce play, and that's a perfect scalp in the markets on Amazon. Comes right to the tops of these last couple candles, which is gap fill, right there, and look at the bounce coming through. So some very nice little technical setups today in this market. And again, you can take a look at U.S. Steel. U.S. Steel is another fantastic one. I called a short out to my chat room today at this level right here at the 200 moving average at 45.80, and look at that pullback, and then it actually retraced, same thing, and then fell off that. So you can see that a lot of these commodity stocks are still having a little bit of an okay day. Most of them are flat to higher, but for the most part, they have come off their highs in this market. The key again, folks, is the dollar. It all comes back to the dollar. The UUP is down 2 pennies on the day. It hit a master level on Friday on the dollar, and that triggered the little bit of a rally that we saw late in the day on Friday from the lows once the dollar started to fall off that high. When the dollar moves up, the markets move down. Simply put, folks, and that's why it's so important to see that a dollar is actually weaker. Remember, if you go back to March of 2009 and look at the chart on the UUP, and in fact, I'm going to do that on the weekly chart, I want to show you something. Look at this. Here's where the rally started, and this is the last little lesson of the day. The rally in March, this is March, started when the dollar topped. This is the chart of the dollar, folks. As the markets fell here, as the dollar fell, the markets had basically, what, a 10-month, an 8-month rally, somewhere in that range, and the whole time it's going on, the market's falling. The dollar's falling. Now, all of a sudden, we've had a move up on the dollar, and look at what's happened to the markets. The markets have started to go down. All right, and that shows you that there's an inverse relationship between the dollar and the markets. When the dollar goes up, markets go down. When the dollar goes down, markets go up. So just keep that in mind, folks. It's very important. And the ideal kind of nature of thinking about that is because what you're seeing is when the dollar goes up, it pushes commodities down. And when commodities drop, then commodity stocks drop like ExxonMobil. And ExxonMobil is a huge portion of the Dow, so the Dow falls as well. So it's kind of a relay track right through, a rippling effect throughout the markets. All right, folks, that's all for today. Have a wonderful day. We'll stop by tomorrow with another intraday video, or you can view them by joining the Research Center, the nightly 40-minute long videos that I do in hardcore analysis with plays, calls, education, and more. Take care.